interesting. I work with First National Bank of Omaha. We recently rebranded, so you probably have seen our signs around town listed as FNBO, because believe it or not, there are a ton of First Nationals across the country, and we are not all the same. So this helps separate us from the pack a little bit. We are 160 years old. We are the largest privately held bank in the country. So we've been run by the Lauritsen family for a few generations now. So that's something that we're very proud of. I myself have been with First National for over 7 years, 8 years in banking total. But I've really enjoyed my time with First National. It's a great organization to work with, and we really support and believe in our small businesses, especially in Colorado, because it's just obviously the best state to live in. So that's a little bit about me.
Thanks, Brittany. Can I go over to Lewis Hagler?
Hey, everybody. I'm with Colorado Enterprise Fund. I've been here forever, 26 years. They haven't gotten rid of me yet. That is a good thing for me. I'm the Director of Credit. So I also handle Northern Colorado, including Larimer County. I live in Fort Collins, so it gives me a little bit of a understanding of the market. Before that, I was a director at the Small Business Development Center in Boulder for a short time, and kind of a serial entrepreneur myself. I'm an old guy, and I have filed a business tax return every year, but one since I was 19. So I kind of get the idea here, know what you're going through to some extent.
Thank you, Lewis. Rick, can I go to you?
Yeah, Rick Kale, and work with KeyBank. I'm a transplant in California. Don't hold that against me. And I've been in banking for 21 years. And most of my career, actually all of my careers, I've been on the business side or commercial side. And, you know, KeyBank has been around for a long time. I don't want to bore you to all the details. You know, the information is free flowing. You could just look it up. Since this introduction by myself, I would say I want to thank you for the opportunity to join this panel, and hopefully everyone can learn something every day, through this afternoon. I'm looking forward to hear what everyone have to say, and hopefully I could contribute a little bit as well too. I think one of the things I'm really excited about what I do is working with local businesses and making a difference. That's really what drives me every day. Thanks.
Thank you, Rick. Michael Bellis with DreamSpring.
Hey, thanks, Mike. Yeah, my name is Michael. I work with DreamSpring. I'm a business lender here in Northern Colorado. There's a few of us lenders for DreamSpring in Colorado. We work in a few states in the Mountain West region, typically. Like Lewis's organization, Colorado Enterprise Fund, we're a micro lender, or a CDFI, a community development financial institution. So we do some of the lending that banks can't do, and that means I get to work with a lot of interesting clients, some non-English speaking clients, some immigrant businesses, and some really cool folks that for one reason or another can't access credit in other ways. But we all do sort of the same thing in that offering credit to businesses. So yeah, I enjoy what I do. I live here in Fort Collins as well.
Okay, thank you, Michael. All right, so I appreciate each of our panelists introducing themselves. So what I'm going to do to kind of kick this off is I've got some questions to pose to the panelists, and we'll hear from each of them on those. So, and then we will throw it open to questions as we go along. So, and we have a relatively small group. So if you've got follow-up questions from the panelists, feel free to yell it out, and we'll make sure that we get those answered. And also feel free to put any questions or comments in the chat if you wish. So here's the first question I'm going to ask. The nation, Colorado, Northern Colorado, we've been pretty heavily impacted by COVID since about March. And tell us a bit about, for you and your company, how has COVID impacted what's happening in your banking world? And before you answer, I am going to mention that I'm going to ask you a separate question about PPP loans. So don't go too far down the rabbit hole of PPP loans, but give me the banking overview. And Rick, if you don't mind, how about I start with you?
Sure. I think the outlook with the bank as a whole is that this is a challenging environment. We've been discussing that from day one. But however, I think the overall consensus is that we're cautiously optimistic in that maybe we have not seen the true effect of COVID down the road. But as of now, right now, with the programs out there and also lenders being cognizant of that, the temporary setbacks are just temporary for now. But lending's still going on, and we're doing everything to support all the small businesses and those the client if they're asking. So far, as far as the credit side of it, I haven't seen too much differences or pushback. I mean, end of the day, we're a business. That's how we keep our doors open as well, too. So regardless of what the situation is out there, we have to continue to do what our core business is also just make sure that we're out there, continue to keep the funds available for folks who need it.
Okay, thank you, Rick. Brittany, could I go to you next? Same question?
Yes. To figure out how to unmute.
Okay.
So I would have to just agree, I think banking with banks across the enterprise here in Colorado, it's pretty much, I think, the same atmosphere, is that we are taking things in stride. We're kind of out there on the battlegrounds with our small businesses that we feel that pain, we see what's happening. And First National's done different marketing campaigns and different avenues to try and help our customers get access to the limited customers that they can reach now because of the executive orders that are in place. But business is still being done, and we recognize that as a bank, and we support that. We want to be a part of that. So, we're out there helping our small business customers. It's a different world we live in right now where, meetings are happening virtually and at limited capacity, but they're still happening. And so that's what's important to us, is just that we continue to recognize that and work with our customers to be successful.
Okay. Thank you, Brittany. Michael, could I ask you to go next?
Sure, yeah. So unlike Brittany and Rick, who represent large corporate banks, we're a much smaller nonprofit organization. And so our revenue streams are different. We make money from people repaying us for the loans that we give them and for the fees that we charge on loans. But we also make money in philanthropy, and we get donations, and we get money from large banks and from other nonprofit institutions that help fund the activity that we do. So we're a little bit more diverse in our funding sources there, which is kind of nice during a time like this. We can lean on some sources of funding, during periods when the others may dry up, and vice versa. During this, the COVID period, we've been primarily concerned with our existing clientele, the folks that we already have relationships with, making sure that their businesses remain vibrant and survive this period. And then in the continued lending that we've been doing in our continued outreach and marketing, we're being very careful to work with businesses that really feel like they've got a good grasp on how to get through this, what they're going to do in the future, what sort of ways they're adapting and changing their business for COVID. So we're very conscious of that. But overall, we feel like a small, nimble organization, and we've been able to make some kind of pivots and changes. And luckily, we're pretty much entirely remote to begin with, so nothing's really new for me. This is where I worked from before all this, so it works fine for us.
Okay, thank you, Michael. And Louis, please take us home on this question, if you would.
So I'll try to orient the answer a little bit toward the participants, because we're all in the same boat as far as the banks and CEF and DreamSpring. We do have to be cognizant of our internal situation, and it has affected lending, obviously. We had been lending for 45 years straight, and in March through June, we kind of backed off on our traditional lending and started doing a lot of these emergency state, local, county, city programs that have been developed, 8 or 10 of those. And then since about June, July, we've gotten back into lending, kind of our core lending. But it is a different environment. I don't have to tell you that. It's different for the banks. It's different for the lenders. While CEF can be more flexible, and we're always more flexible, but there are these 5 C's of credit, and Mike will probably get into those here pretty soon. But one of those C's of credit that any lender looks at is condition or conditions. Conditions are different now. Often doubt means where a bank or a lender might have approved a loan, Now, doubt might mean denial. So a business has to be well positioned and create a good narrative to back up their financial statements for us to be able to make a loan. You've got to show that business is still okay at this time and that you can still make money during a difficult condition. And that's harder for retail face-to-face type businesses than it is for some other models that have been a little bit more fortunate.
Thank you, Louis. I did want to say to our listening audience that Brittany's organization, Rick's organization, they are what I would generalize as a traditional bank. It's a commercial banking operation. And what I referred to generically as a microlender, Colorado Enterprise Fund, and Michael did a good explanation of that at DreamSpring. In Colorado, they operate kind of like a hybrid between a philanthropic organization and a bank. And we use them a lot here at the SBDC because they're really good at lending money to clients that may not have the collateral position that a bigger bank would want to see, particularly if it's an SBA back loan. I'm probably overgeneralizing, but that's kind of where the niche is. So Mike Forney, do you have a question?
Well, yeah, kind of a follow-up question, and to all four of you, and it regards what I like to call appetite, what your appetite is going forward. And, you know, part of what Michael said, you're concentrating on your existing clients, which I can understand. I think the issue that we may have, and I'm a SCORC and SBDC counselor, is with a lot of our clients who are now saying, you know, we really want to start a business in this environment. And so part of it is, you know, normally would say, well, take a look at the SBA loan programs, be sure and set up a meeting with a small business lender. But I'm wondering very honestly, how much time are you able to devote to new clients who you know may have all 5 of the C's, but or how much of it is actually spent working with existing clients on working out defaulted loans or loans in you know that are struggling. So, and the reason that that's important is, should we send people to you or should we have them wait?
Rick, why don't you start with that first, and everybody can quickly chime in if you would. Thank you, Mike.
So thanks, Mike. I would say that as a, we're not the largest bank, but as a larger institution, we honestly, startups never in our wheelhouse, a true startup. Now, however, when you say a new client, if you're talking about existing client, existing businesses that's looking to a different institution than what they're currently banked with, and want to discuss additional business or expansion and whatnot, I think those conversations are still happening on a daily basis. Now, as far as a true startup, we will have to utilize programs like SBA as such that you discussed. And also, as Louis previously mentioned, the 5 C's credit really comes into play, and the viability of a new startup is going to be a big question. So yeah, it'll be more challenging than before. And then before COVID, startups challenging for traditional bank nonetheless. So yeah, I think that's pretty much sums it up right there.
Okay. Thanks, Rick. Louis, could we go to you next?
Sure. So I'm going to get just a tiny bit philosophical. There's this saying out there that says the early bird gets the worm. And then there's another one that says the second mouse gets the cheese. And everybody has to figure out in terms of a startup, which applies right now. A lot of people get a lot of startup requests, and I think really this may not be the time to be all in a business, especially that is heavy customer face-to-face interaction. So we're all trying to figure this out. What is the right time for the right business model? In terms of getting out there and see, Mike, we are open for business in terms of we're hitting the ground. My lending team has been tasked with bringing loans in. Yes, we want to do existing loans, but we also traditionally do startups. But I will tell you that a startup has to be right. There has to be outside income, meaning someone just comes to you with and says, I want to start a business. There's no income in the household. There's no way we can make the payments unless the business takes off. No, we don't have collateral. I don't have any money to put in. Nobody's going to do that one. It's got to be pretty tight. It's got to have some strength to it in those areas.
Thanks, Louis. Michael, could we go to you next?
Yeah, I think in terms of appetite, especially like you said, Mike, in a dream scenario where someone sort of ticks all 5 of those C's, which really we never see. There's always a weakness somewhere. But even in a dream scenario, our appetite has just changed and our scope is just slightly narrower now. And so the clients very well may fit our new and sort of more limited requirements, especially if they have sort of that magical all 5 C's lining up, all the ducks in a row. But our appetite has just shrunk a bit for the time being. And like Louis said, we'd rather be the second mouse than the first one as an organization. So we're being careful and we're sort of tentatively putting one foot in front of the other carefully, gently right now, so as to be able to do much more lending in the years to come, to not overextend ourselves and do a lot of bad loans in this period to businesses that maybe don't have a good idea of how they'll survive this period. But certainly we're still lending and we hope to get back up to our regular lending volume over the next several months. We're just doing it at a sort of a careful and conservative pace.
Thanks, Mike. And Brittany?
Yeah, I would just agree with what everyone has said because, I mean, especially coming from a bank standpoint, pre-COVID, we had to have kind of boxes to check. And if those boxes didn't check with the startup company, that's where we would typically partner with someone like the Colorado Enterprise Fund or DreamSpring to help us be able to get a deal done. Now that we're kind of in the midst of COVID, it's still the same conversation. Like I said earlier, business still has to be able to move forward. Business is still happening, but it's just going to be a different kind of conversation with that customer and what they're looking to accomplish. And like Louis said earlier, what does that narrative look like? So are they coming to the table with 20 years experience in this industry, or did they just decide, you know, we're going to wake up and start this new business today? So there's different variables in play, I think, with the startup. First National, we are a preferred SBA lender. So we do typically take our startup customers through the SBA route. That is just something that we've always done. But again, partnering with like our micro lender partners is something that we really value because they do bring a lot to the table as well. But I think too, especially in the startup field, as we look forward, you know, as we get deeper into this season of winter, what does that look like? We kind of, as a bank, we have to kind of prospect forward and see what that environment is going to look like if there's another shutdown. So that obviously impacts appetite as well.
Thanks, Brittany. And Mike, appreciate the question. Louis, this was not on my list, but since you brought it up, I think it's very appropriate. Can you give us a quick run through of the 5 C's and how that has meaning to an applicant?
I'm old, Mike, and I don't always remember them all, so I may need
I
some
will help you.
Okay, so not in order. Credit for us, for a bank, credit, I won't speak for the banks, but we will look at more difficult credit. I mean, your personal credit is what I'm talking about. We are looking for patterns, not an event. An event is a medical issue or something. We get past those pretty quickly. A pattern is, I just don't pay my bills. That's different, but we're always more flexible. Collateral is one of the secondary source of repayment. Banks want to usually see collateral. Sometimes I use the SBA programs for that. We want collateral too, depending on the loan size, but we're more flexible once again. Cash flow. Everybody needs cash flow. That's how you pay a loan back. The banks, CEF, DreamSpring, I'll speak for all of you because I think this is safe. No one does highly speculative loans. Yes, you can do maybe a startup is available out there, but you're hearing the appetite isn't great. So how are you going to pay the thing back? We mentioned conditions, and then I always mess up on the fifth one. What's the fifth one? Help me out. Don't leave me hanging here.
Did you say character?
Character. Yeah, see, I always throw that in with credit because that's the only way you really know, although you interview people. You know, no one's going to make a loan to someone that doesn't know what they're doing and is not upfront with all of the good and the bad. Just today, I had somebody forget to tell me they had a tax lien. Things like that come out eventually. So yes, thank you, Brittany. Character.
Any of our panelists have a comment on the 5 C's? And by the way, I will make sure we send that out to our participants. We do have a little write-up about that because I think it's a pretty useful way for an applicant to really understand how a bank is going to look at their application. And what you want to do is you want to maximize your strengths and minimize your weaknesses. So, and everybody's got strengths and weaknesses. So, Michael, Rick, Brittany, any comments on that?
Add on to what Lewis and Michael said about, you know, the 5 C's and the conditions. I say right now, I think condition is one of the things that if you're approaching your bank and your banker, you got to pay a little more extra attention to address the current condition and how you plan on moving forward in this condition. So that one. So instead of having 5 perfect, like Michael said, that generally there's only one always lacking. That 1 C is automatic right now, lacking because of what's happening in the environment right now we're in.
Okay, thank you, Rick. Michael, I'm going to start our next question with you. Within your organization, I mean, you obviously see a variety of applicants, different applicable positives, negatives about their application. What do you like to see in a good applicant? What makes an applicant strong in your eyes?
Good question. Thanks, Mike. So for us, like we've sort of reiterated here a couple of times, as lenders, we're looking for the same sort of things, but our organizations may have different appetites for what levels of those different C's that we'll tolerate or that we'll be interested in. For us, one of the things that we like to look for is collateral. All of our loans don't require collateral. We offer some unsecured loans without collateral as well, but especially larger business loans for folks who know what they have and what it might be worth and come prepared, willing to list certain items as collateral. That's always very helpful. We also like to see people who are familiar with their own personal credit, who are aware of their own credit score and some of the things that impact it both positively and negatively, because for better or for worse, we have to rely on the credit score to a certain amount just to qualify them based on our tiers of loan sizes that we're able to offer. And I don't want to take up all the good answers here. I'll say lastly, one of the things that we look for is an exact use of funds. So we don't give out loans just for people to do whatever they want with. We like to see exactly what the funds will be used for, specific project uses, specific expenses, costs, whether it's a piece of equipment to be purchased or construction build out or some sort of expense that they can show us an invoice for. We like specificity in the project costs that we're going to fund.
So the opposite of that would be the person that comes in and says, how much can I get? That would not be ideal in your eyes, correct?
Right. Yeah, that's sort of a red flag early on.
Okay. Brittany, how about you? Same question. What makes for a good applicant in your eyes?
So, you know, with being a bank, we're federally regulated. I would say out of the 5 C's, the 3 that are going to be the most important for a bank is going to be your cash flow, collateral, and credit. Those 3 buckets. We can get creative with filling those buckets, but traditionally those are going to be the 3 that we put a lot of emphasis on as a bank. For me as a lender, one of the big things that I look for in an applicant is just being communicative. I think if you have open communication with your lender, you're honest about, you know, your history, your background, what you're bringing to the table with a deal, it just helps us in the process and in order to put options together for you. it really lays out, I think, the scope of what we could do as a partner with having that open communication.
Thanks, Brittany. Rick, to you.
The perfect candidate will be the one that listens and do everything we ask them to do. No, I'm kidding. Joking aside, I think the most important thing is to recognize, I love working with clients who understand that it treats us like a partner. And in that, one of our primary job as loan officers out there when it comes to credit is we have to tell a story, right? End of the day, the decision makers only see paper and an application and a loan package. It's our job to tell your story. So be prepared with your story when you come to see us and have a dialogue with the story. There's a beginning, middle, and ending. You got to know your numbers, your asking, your plan. And the more that you can make that clear and concise, the more we could actually put together and represent you in the appropriate way, in the way that increases the chance that everything gets approved.
Thank you, Rick. I like the before, middle, and ending part. That's an interesting take on it. So, okay. Lewis, wrap us up on this question, if you would.
Not a whole lot to add. The four best answers have been taken. I agree. I'll just add that a person needs to understand their market and what they bring to that market, and not just, yes, I'm cheaper. And understanding that an existing business, you expect that they know that because they're making money, but things change, conditions change. And if someone has that really embedded in their head, how am I different and how can I apply that to a market, then they're going to be more versatile and more survivable when things don't go as they're supposed to.
Thank you, everyone. And Lewis, stay unmuted, because since you wrapped up the end of that question, I'm going to start you off on this question, which is the reverse. What do you see for red flags with applicants that are really a warning or make your hair stand up to you and your organization?
I'll pick one. That way I don't take all the good ones. Non-disclosure, failure to disclose things that are important. Tax liens, you don't have the cash that you said you have. Anything that's going to come out can indicate a problem with character. And I don't mean character with a big C, doesn't mean you're a crook. It just means you're really not prepared for the process, and you might not be, might be withholding some things that you think might kind of go under the radar.
Okay, thank you. Could we go to Rick? Let's go to you from there.
I think I'll just take the best one. That is absolutely the truth. Now, as far as beyond that, I think not providing information and have to be pulled out with subsequent meetings and questions all the time, rather than just tell the story, give the full disclosure up front, rather than having to just keep on going back to the client to ask or found something else out and say, hey, explain this for me. That's pretty much, it's kind of the same long line with the Luce said. I think that is one that I think we all despise. Okay.
Thanks, Rick. Brittany?
I'm going to be ringing the same bell here. It's so true, because it's just that when you can't have that kind of trust and just being able to rely on the information that's being presented to you, it really does throw things into a kind of a spiral where it just makes your lender question, what else is going on? What else don't we know about? Because really, when you present a package to a lender and you say, here's what I've got, once you supply your financials, your personal financial statement, your tax returns, we're going to be able to see things that, if you didn't or weren't honest about at the beginning, or you just omitted it from the conversation, we will be able to find those things. And that's going to just make that conversation a lot more difficult if there's just honesty from the get-go and information that's disclosed up front. Again, we can present the options that are going to best fit what you're looking for and, for your business and yourselves as individuals.
Okay, thank you. And Michael, finish it up in this area, except you can't talk about non-disclosure. You got to pick another red flag.
Yeah, I've got another one.
Okay.
It's when clients come without a good understanding of their own business. So they're confused by the numbers. They don't have a good grasp on their business financials or their business planning and stuff. And a great tool for them is to have a relationship with the SBDC and have a consultant from the SBDC. And so if I encounter a client who's applying for a loan that doesn't really know what they're looking for, how much they need, their business plan doesn't seem to make any sense, their financials are wacky, they're sending me pictures of handwritten notes instead of well-organized spreadsheets, you can't even imagine how many of those I've gotten. They go to the SBDC. Yeah. So clients who don't have a good enough of a technical grasp on the business. I mean, we're happy to work with people at all stages, but you've got to understand your business better than I do. You have to be the expert when you come to me talking about your business. So if they don't have a good grasp, they go to the SBDC, which normally is like a sink or swim situation for them, because they'll either find out that their idea doesn't work or they've got some serious issues, or a consultant from the SBDC will put them on the right track, and then they'll be golden.
Thank you, Mike. Well said. And I would put SCORE with Mike Forney's leadership into that. The Loveland Business Development Center, which does very similar work to SCORE, to us. If you're a tech company, you've got organizations like the Innosphere and their Sage Consulting Network that provide that same sort of street level experience. So, all right. Hey, audience, anybody have any questions about the ideal applicant questions or red flags for our panelists? Any thoughts on what you just heard over the last couple of questions? Okay, feel free to pop them in the chat if you wish. I'm going to move on to the next question here. And I am going to ask you guys about PPP loans. When the COVID crisis hit, there was an initial round which you banks were not involved with, and that was the Economic Injury Disaster Loan, which went through the SBA disaster team. But the much bigger PPP or Paycheck Protection Program did go through all banks, including your organization, all banks that were authorized to issue 504 SBA and 7A loans. So the question I'm going to ask for you is, what's been your experience and your bank experience with PPP loans? And then why don't you come back around and also talk about the Ppp Forgiveness Process, just so we can kind of get a feel for where your bank is at with that and how that's going to be calculated. And Brittany, could I start with you if I may?
Yes, absolutely. So back in March, when the PPP program was first released, I think the SBA did kind of the best job that was available at the time, which was just, we know businesses need help. We will figure out the specifics of this later, but we need to get this aid out to businesses and get it available as quick as possible. So First National Bank, we did make sure we did everything kind of electronically through our PPP program. So we were not one of the first banks that was open to accepting applications, but we did open it to non-customers. So that was a big thing that we kind of decided as a company that we realized that some of those larger banks had restrictions in place where they could only accept a certain number of PPP applications or a certain dollar amount, and small businesses were being essentially kind of shut out of the program aid. So we opened our doors to non-customers, and we were really proud of that fact because we actually were able to, I think, earn their relationship at a later date because of the work that we did on the PPP front. I know in total, Colorado, because we're a bank that covers multiple states, but in Colorado, we did over 1,900 applications, and it was a little over 215 million in PPP loans that we did in Colorado. So in total, across all of our states, we estimated that we saved about 90,000 jobs So that's something that we're very, very proud of and actually honored to have done for the small businesses across the states that we cover. Ppp Forgiveness, we're right in the middle of it. So it's keeping us busy. We did kind of the same thing where it's all electronic. We are anxious to kind of help our customers that are below that 50,000 threshold because they can do the easy application, which is awesome. We really appreciate that as a help to, I think, all banks, and the micro lenders here appreciate that too. But we're right in the thick of it. We're essentially, how we decided to handle it is we extended invitations to our customers based on when their PPP loan funded. So those customers that got their PPP loan, say in April, could apply ahead of those that got it in June. And that way it just also helps our system run smoothly. Yeah. We send them efficiently through to the SBA. And just in the first few weeks, the majority that we've had have been approved. I think we've only had one that was only partially forgiven. So that's something else that I think, people were using it for the right purposes and are doing the right things, and it really helped the community.
Thank you, Brittany. And I know how busy you folks were on those loans. On the forgiveness part, is your bank working with the SBA 3508 forms, or did you do your own company form?
We are working with the SBA forms. So right now we just have the long standard form available. I think in the next week or so, we'll open up the easy application, and that's when we're kind of anticipating the majority of our customers to apply because they did fall below that 50,000 threshold. So we'll be very busy in those weeks to come.
Okay, thank you, Brittany. Rick, I'm going to ask you the same two-part question. You have the con.
I think I still have a little shell shock from the initial PPP 2 months. But however, we understand how vital that program was to our clients and small business, within the United States. So during that time, basically all hands on deck from our, executives who were based in state of night all night, pushing the docs out to make sure that people were getting the funds they need as quickly as possible. Proud to say that KeyBank actually ranked number 7 in the nation amongst the big boys. So we were pretty proud of that. And as far as at this point, we are in the middle of the forgiveness program. And to your point, we are actually both during the application process and also forgiveness process. We want to make this as easy as possible because, as Brittany alluded to, SBA guidelines were kind of loose and gray. It was open to a lot of interpretation, and then even instruction that's out there, it's hard for borrowers and clients to interpret them sometimes. So we have overlaid our own application electronically. So once they go through these steps and to fill them out, auto-populate to the format that SBA needs. So we think that's working pretty well right now. And just like most banks are doing is we're putting people through waves. So first come, then the first wave of people who receive the funding will be the first wave of people to apply for forgiveness. So we're right in the middle of it, and it's keeping us busy. But also, same time, we also have our regular job, which is making sure we're serving our clients. So we're busy doing that. I don't know if that covers the question that you have.
Yes.
That's kind of what's going on with us.
Thank you, Rick. And
Sure.
Lewis, how about a Colorado Enterprise Fund?
Well, we did about 800 of these things, Mike, and they were a lot smaller than Key or First National. But real frankly, I'm real good at going out and getting into the market and bringing loans in. But anything that's real complex, my company, my CEO knows that I'm not supposed to touch that stuff. So I do not know a whole lot about the PPP program. They made it clear that that was a no-no for me. Go make loans and you're not doing that complex stuff.
Okay. Plausible deniability. I think that's the term you're looking for, Lewis. Okay.
Yes, sir.
Michael, how about you? Would you like to comment on behalf of DreamSpring on that?
Yeah, sure. We ran head on into the PPPs back when those were the hot thing to do. We did 4 times as many dollars lent in PPPs than we did in all of the 2019 calendar year. So we were running like crazy at those things. We normally lend in only 5 states, but during the PPP craziness, we expanded our authorization to lend in 20 states. So we were doing PPPs in states that we'd never even touched before, never even thought about expanding into before. And we really got to lean on our sort of technology platforms that we built out to process these things. So it was a learning experience. It was a crazy workload for all of us for a while, and then things totally calmed down and we were all geared up for another round. But as you know, things didn't seem to work out that way, and who knows if we will get into dispersing another round. We are working on forgiveness now. Everybody that we've processed forgiveness for has been completely forgiven so far. We've got our own forms that we've sort of tailor-made, and they're pre-filled for our clients for the most part, so people don't have to make those kind of mistakes. And then our form basically takes their information and plops it into the SBA form for us to submit on their behalf. So yeah, towards the end of the PPP program, like everybody, we were seeing an insane amount of fraudulence. I mean, probably 1 in 10 applications was legitimate by the end of our process. So there were just a lot of folks trying to game the system. And so we had to get very, very careful with our critical eyes and thinking carefully about the applications we processed. But first and foremost, we got a lot of the PPPs into the hands of our existing clients here in Colorado and in the other states where we work, which was a top priority of ours. So it was an interesting experience. We're not sure whether we want to do it again or not, but we'll leave that up to the government.
Okay, thank you, Michael. I've got, I'm going to ask each of our panelists to make some closing comments, but before I do that, any questions on any topic related to banking from our listeners? Travis, Douglas, Mike Forney, you're first up. Go ahead.
Well, you know, Mike, I can never shut up when I have, but I just want to share something. You know, Mike and Terry have put me on a team with a number of other SBDC counselors to work with a lot of small businesses on both the PPP and the EIDL loans. And this, Brittany, is for you and for FNBO. I have not heard a single negative comment about the people that I've worked with this last 4 or 5 months on PPP loans that they've approached FNBO with, including 3 or 4 who went to you when they could not get a response from their own institutions. So I just, you know, it's not very often that you get kudos, but I just wanted to share that with you and let you know that a lot of people appreciate it. I think you picked up a lot of new customers.
Thank you. That means a lot. I mean, we, like everyone said, I think we put in the work hours. I remember whether my customers liked it or not, I sent emails at 10 o'clock at night because that's how fast updates were changing with that PPP program and new things that were coming out. So happy to do it. Happy to help, you know, even those that didn't bank with us at the time.
Thank you for that comment, Mike. Brittany, we are recording this, so we'll make sure you get a copy of this so you can take it to your boss. So you should see that. So
thanks.
How about the rest of our listeners? Any questions for anybody on the panel? Okay, well, with that, if you do think of anything, shout it out. I'm going to ask each of our panelists my final question here. What didn't I ask that you feel somebody should know? And then if you want to say a few words about your organization and make sure that we have your contact info, and we at the SBDC will also make sure we get that out to everyone. But Rick, how about I start with you on this final question?
Thanks, Mike. First of all, appreciate everybody's time today, and I think this format was awesome. I will say that you covered pretty good as far as general questions. Any specific question, I think that folks could reach out to the panels and maybe have a side conversation, get more details. But as far as in closing comments, I think one of the takeaway that I got is that as a lender, we all want to have a good relationship with our clients. So with that in mind, if they're coming to their bank or bankers, just start building that relationship and that trust. That's super important when it comes to time for the asking of when it's time to approach for lending or whatever else that you're looking for. So bring the story, be honest with it in the conversation, and be prepared in what the asking is, so that you can tell that story. And then lastly, so about a quick plug, I just wanted to say that, you know, KeyBank as an organization, super proud to be part of that team. Again, you know, we ended with number 7 in the nation for the Ppp Loans. Worked really hard and diligently through those months. And then as far as we just were named number 7, I think we like the number 7 SBA lender in the nation as well too. So we're definitely are capable and knowledgeable in that arena, and we're here to help.
Thank you, Rick. Michael, could I go to you next?
Sure, yeah, I think we hit on a lot. One of the things that we didn't touch on individually is sort of like what we each have on offer at the moment. For us, the smaller lenders, Lewis and I specifically, we offer fewer sort of capital products and lending products and other wraparound services than the banks do. So we're not a deposit bank. We don't offer credit cards or lines of credit or banking services, but we do kind of like have a variable list of products that we're offering at any given time. So I would just say, instead of spending everybody's time on that now, you can feel free to reach out to us and ask about what we're currently offering, or check on our websites as well. And you can sort of see what our current products on offer are and what kind of lending we're doing right now.
Thank you, Michael. Before I finish with Lewis and Brittany, there's a question in the chat from Travis about examples of what counts as collateral. To me, that is any asset you own that doesn't have a lien against it. It could be cash, it could be a house that they have an equity in, it could be building, it could be a piece of equipment, an automobile to some extent. And bankers, any other comments on that?
I think we all probably count collateral a little bit differently at our own institutions. Personally speaking, for us at DreamSpring, some of the things that people assume that we would accept as collateral, often we won't, such as business inventory. People oftentimes think they've got a lot of inventory on hand that they're preparing to sell. Well, we normally don't take items as collateral that won't be there for a long period of time. So think about what you would have and what would retain its value, or even increase in value theoretically, during the lifetime of the loan. So we don't want to take something as collateral that either will break down or will be gone entirely before the lifetime of the loan is repaid.
Anyone else?
This is Brittany. I would just add to that, you know, from a bank standpoint, we aren't collateral lenders. So a lot of times we'll have clients that will come to the table and maybe the deal doesn't cash flow, but they say, hey, we've got, you know, hundreds of thousands of dollars in equity. Can't we just do a deal based off our, you know, assets, our receivables? And so there's more pieces to the puzzle than just the collateral piece. And then lastly, for us, we typically do like our collateral to match the purpose of the loan. So a great example is a lot of times folks will say, you know, I need a working capital line of credit. What do I need to use as collateral for that? Well, typically working capital, you're going to need that for timing differences, seasonality. So that's going to typically be something like your receivables that would back that. There's other scenarios, but I just know that like a lot of times some folks will say, hey, could we use our personal residence? But if it doesn't match what the purpose of that loan is for, that's where it can give banks a little bit of a hurdle to come up with that.
Okay.
Can I ask the question specifically about, from time to time, we have business people or startups, younger people who really don't want to get a personal, you know, a family member to go on the loan, but on occasion we'll have a family member who will put a certificate of deposit in for a substantial amount, with the ability for a lender to draw down on that if there's a default. Do you see that as a potential use of some kind of collateral that a borrower might be able to provide?
Rick, do you want to start off on that?
Yes, definitely. That can come into play, and I think that is viable. But at the same time, too, that's only if the other conditions are met. You know, a good business plan, cash flows there, or at least a projection that could be backed up. But cash collateral, I think it's at least as welcome, at least with my credit team. But we don't want to rely on it.
Lewis, Brittany, Michael, anything to add there? Okay. All right, thank you. Brittany, why don't we go to you before we go to Lewis with that final question?
Can you
Which
remind
was,
me?
what else would you want this audience to know that we didn't already talk about specifically from your vantage point? And what else do you want to tell us about FFNB?
So I would just second kind of maybe what Michael went off that, you know, First National, we do have a very broad range of products. So a lot of times people think, I think, especially when they think banks, they don't think that we dabble in real estate or that we offer commercial mortgages, but that's actually one of the biggest areas of our business within commercial lending is business real estate. That can be non-owner occupied, though that's a little trickier now because of COVID and everything going on. But we do things like working capital, vehicle loans. And I think it's really just, you know, Rick's point early on was that we are more or less your partner in this venture. It's not like, here's your loan, see ya in a couple of years, hope all goes well. It's, you know, we want to check in with you quarterly, and if not even monthly, to see how things are going, because it's great to have a partner when business is going really well and to get you, you know, off the ground. But I think it's even more valuable to have a partner when things aren't going so well. And I think COVID is a kind of a perfect example of that for a lot of businesses. Is they relied on having their lender, whether that's with a traditional bank or a micro lender, as that partner to kind of help get them through that. So that's something that I would just, I think is a key takeaway is regardless of who you work with, just make sure that you have a really good relationship with that person, the open, the honesty piece of it, that's key, and just good communication with them because they're really there to help you.
Thank you, Brittany. Some of you have heard me say this before, but I know when I had my business, you know, I made a point to have a coffee or lunch with my banker every 3 or 4 months, just so they'd know what was going on with the business. And if I needed something, it wouldn't be a total out of the dark surprise. So I totally subscribe and recommend what you're saying about looking at that as a strategic partnership / relationship. So Lewis, give us your final thoughts if you would, sir.
Sure. Everybody on the panel is either a partner, a funder. Our illustrious host here is a partner. Michael, we send things back and forth to each other that would not quite fit the model. And my point is that doesn't happen in every one of the communities and counties that we serve in. Larimer County is kind of unique, and for the whole state, Larimer County is almost 20% of our portfolio. So it's kind of a special place. I live up here. It's an excellent business environment, really, really good resources up here as evidenced here on the panel. So I enjoy it, and you know, it's just a great environment. So if you're doing business or you want to do business in Larimer County, I think you could not choose a better area.
I agree, Lewis. All right, with that, we will wrap it up. I wanted to thank our 4 panelists: Brittany Brown with First National Bank, now FFNB. Lewis, okay, thank you. Lewis Hagler with Colorado Enterprise Fund, Michael Bellis with DreamSpring, and Rick Cow with KeyBank. So thank you very much for being on. If you do have any questions, our Larimer SBDC info is in the chat, and we will follow up with the participants and the attendees by tomorrow morning and make sure you got everybody's contact information. We'll also give you a quick explanation of the 5 C's of credit, because that is good info to know. So thanks again, everyone. Enjoy your Thursday night and your weekend.
Nice, babe.